Okay, in this interview, we actually have someone who's worked very closely with Doug Casey, actually worked with him for 14 years, I believe, and was really kind of Doug's prodigy. Doug was obviously one of the investing legends. And so this is going to be a really interesting interview. His name's Lobo Tiggre. He's got a independent speculator is his brand. You'll see the link right there down below. As always, I do not do any affiliates. I love everyone's work and want to make sure I let you know about their website. So you'll see it down below. And the reason that I had him on and what caught my eyes, I thought he was probably one of the straightest shooters in the industry and probably one of the most objective and rational people I'd come across. And so I was really surprised with how great all of your other interviews were. And so it's great to have you on.
Well, thanks, Jake. It's always interesting to speak to somebody new. We've never met before, and clearly you've got a lot on your mind, so I look forward to having an interesting conversation.
Okay, so here's how I want to start, just because of the sentiment right now. And I probably do it too much, but I actually like to scroll Twitter and look at the search feed to kind of see the sentiment. And I'm seeing over and over and over, like, people commenting at, influencers like, I'm giving it one more week and then I'm getting out of this thing. And like all these ones like that, right? And then right now we're having Bitcoin move while the metals haven't moved. So then there's other people that are like, 3 more days if silver doesn't go up, I'm selling it all for Bitcoin. And, obviously there's a place for crypto, but my point is really that the sentiment has become very low in the metals and they aren't moving. What's your take on where we're at right now and your answer to that?
Well, a lot of ways we could go with that, Jake, but just the first one is any investor and certainly any speculator needs to understand that markets don't move because you want them to. The universe does not care what your pain is. It's inanimate, sorry. And the markets are an aspect of mass psychology, millions and millions of investors out there, all with their own agendas, which are not yours. And so, it's ridiculous to give the market an ultimatum. All right, Mr. Market, price goes up in 3 days, or you've had, I'm exaggerating a little bit, of course.
Right.
Rebalancing your portfolio if you lose confidence in an investment thesis is not silly. Being emotional about it, though, or thinking that if nothing has changed, but things aren't happening on your time frame, that you've made a mistake, I think is a mistake. If the fundamentals don't change, the technicals don't break down, impatience is not a good reason to sell.
Interesting. Impatience is not a good reason to sell. So on that last half sentence that you said, if the technicals don't break down, if the macro thesis doesn't change. So in the metals right now, we have this election uncertainty and we have this stalled stimulus and then we have new rounds of lockdowns. So overall, on that last half sentence that you said, do you believe in any way, shape, or form the overall thesis has changed at all?
No, I absolutely see it as a win or win more type situation. Politics aside, I know there are people who feel very strongly one way or the other about what's going on in the electoral scene, but it really, for gold and silver, for monetary metals, it doesn't matter. We're looking at more stimulus or a lot more stimulus. The idea of no more stimulus is not on the table anywhere. I mean, it's I've never seen anything like it. When to have the chairman of the Federal Reserve basically telling Congress, like the Doritos commercial, eat all you want, we'll make more, print all, spend all you want, we'll print more. Like, what the heck? What kind of world does the Federal Reserve tell those profligates in Congress that they can spend all they want? It's fine. So no, I really don't see a credible bear case for the monetary metals. And again, impatience is not a reason to sell. The sort of headwind at the moment, there are a lot of things. Well, one, actually, in answer to your first question, and I promise I won't ramble too long, but it's important to understand that investors love it when prices are rising. Momentum chasers jump on any bandwagon that's going up. For prices to be stable is not something people get excited about. But there's nothing wrong with a stable price. If gold and silver went nowhere for the next 5 years and traded just flat as a table for the next 5 years, that would be fantastic for the mining business. That would be, you know which projects make money, you know which companies make money. They'd have time to plan, rationally instead of just guessing what the price is going to be next month, let alone next year. What an amazing thing it would be for the business to have stable metal prices at elevated levels, currently elevated levels. So it's this crazy idea that investors have that if prices aren't going up, something's wrong or it's bad. It's simply not true. So I think that's a big part of what's going on right now is people just, they love upward momentum. The other thing is the vaccine news, and that's a whole long conversation we don't have to get too much into. But let me briefly say that I never accepted the idea, the narrative out there that gold is up this year because of the COVID situation. It started, gold bottomed in 2015. It started ramping up a lot more after the Powell pivot in 2018, late 2018. It really is, for monetary metals, a monetary situation. That's the basic driver here. And on top of that, yes, there was a tailwind from the COVID. If the tailwind goes away, you feel like, that, you're let down a little bit. That's not surprising either. Doesn't change the fundamentals. And really quite significantly to me is that the technicals haven't broken down. When that first, better than expected vaccine news hit, you would have thought, oh, gold would, drop and keep heading lower, some big correction. It dropped for a day and it's been going sideways since then. So no, I really am not worried about the thesis at all. I'm extremely bullish and I'm looking to buy more.
Do you think that we need greater resolution in the election before there's another leg up?
No. I mean, mainstream investors, folks on Wall Street, might feel better about their investment ideas at that point. But again, we have a choice between more stimulus, or it's not even stimulus, it's the wrong word, more easy money and a lot more easy money. And it's coming. And if we have to wait until January or later in January for that, it's not the end of the world. It's just a couple months. So I would absolutely not agree with the idea of, okay, Mr. Market, you got one more week or I'm out of here. I think to the degree that we have waffling around before then, that's fantastic. It creates buying opportunities. For anybody who gets the idea that you and I are talking about, the uncertainty in the near term, especially if you're new, if you're late to the game, is a godsend. And if before that easy money comes, we get all these shutdowns and you get more scared, if there's another panic, if there's another large market event, maybe not a total crash, but a major correction or retreat on Wall Street, I think you could see some spectacular buying opportunities. That's not what anybody who's already long wants to hear. They want to see it going up. But the reality is, as any investor or any speculator, or even as a person shopping in the supermarket, if something you want goes on sale, that's not a bad thing, unless you don't want it anymore. That's different.
Interesting. Yeah, I've noticed, and I tell everyone when I do these interviews, look, I can't say that I have some genius, rational, huge thesis like the people that I interview do. I would say it's an obvious trend and I got heavily invested in it. But what I've noticed is how much what you said, it has to do with the emotional aspect of it. You become a very successful investor and you've worked with many very successful investors. One of those, of course, being the legendary Doug Casey. Would you say that over your career, when you look at the people that have succeeded and failed in investing in anything, would you say being able to have that personal growth element of keeping your emotions in check is, if not one of the most important elements to being able to make money?
I think it's absolutely very important. I'm not sure. Skepticism is enormously important. And there's so many gullible people out there. And they say, oh, this company's going to produce 50% more gold next year or 100% more gold. Well, how do you know that? Well, it's in the press release. Well, sure. Right. Of course it is, right? It's funny. Where is that? Intelligent Investor. This book is, 80 years old now? I don't know. But Ben Graham spends most of this book, and this isn't the speculator's Bible, this is mainstream investment guru stuff. This is one of the most influential books in the 20th century and still in the 21st century. And he spends most of this time talking about how emotional Mr. Market is. So to your point, yes, that's something to think about for yourself. It's also a way to look for opportunities. If markets were perfect, if information flow was perfect, there really would be very little opportunity. There'd be no arbitrage, there'd be no way to speculate. Buy low, sell high doesn't work if everybody sees the same thing and everybody's perfectly rational like a computer. So, it is what it is. I think the world would be a better place if people were more level-headed on whole. But as a speculator, thank goodness that they're not, and markets can get overbought and oversold, and that creates opportunities for us.
Interesting. So I wanted to start off by talking a bit about the metals, just especially because it's such a peculiar time. And there are a lot. I mean, if you really spend an hour on Twitter and you just go through the search feed, I mean, by the tens of thousands, my biggest nervous is that too many of them are going to get afraid. But as we know, as soon as the price goes up, they'll come running back in. So we don't need to worry about it. But on the
sorry, Jake. Let me jump in on that real quick, because I think
Please.
this is an important and perhaps reassuring thing. Is I had said before the first super successful vaccine came out that probably would be a temporary headwind, because I think incorrectly there was this narrative out there that gold's only up because of COVID. Mm-hmm. So if suddenly COVID's not a problem anymore, then that would be bad for gold, at least in the minds of those people. So I really thought actually we'd get more of a hit. We did get slammed $100 in a day for gold, and so silver, of course, with gusto. But then it bounced right back the next day, not as high as it was before, but it didn't continue to crash. So this addresses the specific point you just made, that I had this perception, and I was wrong about it. I thought that new fair weather friends that were just jumping on the momentum would leave in droves the moment that story went away. So the data is telling us that there really weren't that many people, or that even amongst those people, enough of them get that it's fundamentally about the money, about the easy money, the Fed and Congress. So yes, I think the data is actually telling us now that there's less reason to fear.
Yeah, well said. I think that your average person is really starting to wake up. Now, whether they decide that their instrument for that is metals or crypto or mainstream equities, that's, up to your own reasoning factors, but it is obvious that people are waking up to this. So let me go to macro. What are, first of all, the primary causes of these issues that we're facing? We're in a really weird time in the world. We're in a time where people are getting locked down all over the world through it's essentially martial law, and they are having I was looking at the UN website yesterday, and this was an article from June, and already 100 million new people had been pushed into poverty, and they were estimating over 250 by year's end. 250 million people being pushed back into poverty, hundreds and hundreds and hundreds of millions of businesses all over the world. I mean, you think about small places where you are, like Puerto Rico or some random country, and wherever it is that relies solely off of tourism. This is a very peculiar situation, and there isn't much debate allowed because everyone yells at you if you do. And so what is going on, and what do you expect to happen over 2021 and from here on out?
All right, well, what do I expect to happen? I resist putting the guru hat on, because nobody knows the future entirely.
Look, Lobo, I have to say, every time I ask people what's going to happen, I make this joke. Every time I can on cue say that they're going to say, look, I'm not a guru. I know you don't know the answer, but let's pretend you and I are hanging out and we're drinking a glass of wine or we're drinking some coffee. And I'm like,
right.
Lobo,
so
tell me what the heck's going to happen.
Between saying this is what will happen,
right,
making a prediction, and saying these are the alternatives, or these are the things that I think are likely to happen, or even this is the one thing that I think is likely to happen.
Absolutely. So let's go to what you think could possibly may happen.
I am reluctant to say this is what will be, with capital letters, but that doesn't mean I don't look forward, and I am looking forward. But before I go there, I want to reiterate that, you know, a lot of what you talked about is what's happening this year, all these crazy times. This is on top of a much larger megatrend that was already in motion. And if you have been reading or watching things that Doug is doing, then you know that he believes that, and I would tend to agree with this on a macro level, that all that's been done since the crash of 2008 hasn't really fixed any of the underlying problems that caused that. It's been papered over, the can's been kicked down the road, nothing's really been fixed. And so here we are now with this, you know, crisis on top of an unstable situation. So two things. One is all the easy money is making things look better, but has that really fixed anything of the most fundamental underlying situation? I really doubt it. On top of that, then you have this massive new distortion, and you have changes. You have real changes happening in the world and the economy. You just talked about, you know, hundreds of millions of people being pushed into poverty. You know, that matters. You can't just, you know, shut the engine of the world off like John Galt and then just flip the switch back on again and everything is fine. You can simulate, not stimulate, but simulate that with easy money, and everything seems fine again. But huge amount of damage has been done. This is a forward-looking statement, I'm happy to say. I believe a lot of damage has been done during the worst of the shutdowns. I think all kinds of things were breaking in the dark that nobody really knows or could know. You have all this interdependent pieces functioning around the world, and suddenly they're severed, they're separated. And the idea that you can just restart that and everything will be fine, I think is fanciful. On top of that, new shutdowns could make it worse. We could, you know, who knows? It seems like somehow Asia has got a better handle on this whole COVID situation this year than the West. You know, how that can be, I don't know. Is it even true? I don't know. What I do know is that here in the West, we have societies run by lawyers and politically correct politicians. I think there is zero chance that politicians will not adopt a more precautionary principle type approach to what's coming next. Whatever the medical realities may be, as case counts go up, you know, the politicians, I think, are going to react strongly. We're seeing it already in the US, already in Europe. And that has economic consequences. So I don't want to get on a political rant, but I have to say, I think it's a huge mistake. These people that posit this as like medicine versus economics. And, oh, you cold-hearted people, all you care about is the economy. Well, economy is how people earn their living. Excuse me, you need to eat to live, right? So it's a false dichotomy of, oh, you only care about money and not about people's well-being. Well, no, in the world we live in, they're hand in hand. And destroying the economy destroys lives and livelihoods as well. So what do I think is going to happen? I'm not going to give you one scenario. I think there's a very significant chance that Doug Casey's, you know, exiting the eye of the storm, the Greater Depression, that really strongly bear case scenario, that could be upon us. If the powers that be lose control, if the easy money stops working, then things could easily spin way out of control and, you know, head for the hills type scenario. But it's also possible these guys have been able to paper over problems in ways that I did not believe last time around was possible. I did not think that they could stop what was happening after the crash of 2008. And they did. So I'm not going to say it's impossible this time either. They certainly seem to be doing so right now. And the markets are certainly willing to believe. If markets are forward-looking mechanisms, the markets are telling you now that they believe the powers that be will succeed. All this wonderful easy money and negative real rates will make everything fine again. That's what markets believe, and that's what they're saying right now. So who knows? Maybe that belief is self-sustaining. If it's a con game, maybe the con continues for a while. Those are, broadly speaking, the alternatives. But here's the thing. Here's the takeaway. Here's the one strong thing answer I'm willing to give you, Jake, is that none of this is bad for gold or silver. None of this is bad for monetary metals. They may fluctuate. They may give us buying opportunities. Perception may tell us, oh, it's all done or something. But the fundamental reality was I think, baked in the cake before COVID even came along. And all COVID has done is pull the future into the present. We saw a lot of action in 2020 that might have taken a couple more years to play out.
Pull the future into the present. That's a good analogy. All those things that a lot of people maybe said, are far-fetched or conspiracy, negative rates, full-on universal basic income, digital currencies instituted by the government. I mean, these are now looking like a total necessity to not have a total collapse. I mean, if people are already burning cities down, what's going to happen if they don't have any money? And you're right. There is a political component to the investment thesis of metals that a lot of people want to ignore. There are serious ramifications that you don't realize when you live in the American bubble. You think it's bad in America. Think about these other countries in the world. I mean, the UN and the World Health Organization have both said lockdowns were a mistake, and there's going to be far more people that move into poverty than are actually affected physiologically from the virus itself. And there's so much data on how many people die that live below the poverty level. And so we're headed to this really weird situation. And let me ask you, what do you think the tool belt pieces that you think are possibilities that they may use that are also bullish for silver and gold once we kind of get out of the clearing zone of this murkiness of the election, which December 14th is the electoral college vote. So maybe we'll have clarity around then. Maybe we won't. Maybe it will take until January 20th or 21st or whatever. But after that, what do you see are the tool belt pieces? And in addition to that, how they are beneficial for an investor in gold and silver that's right now hanging on by a thread right now, and they're thinking this was the biggest mistake they ever made?
Well, I think nothing is off the table, depending on how bad things get, how scary things are. If the powers that be really lose it, right, there is nothing they won't try. And it's interesting, It sounds like a conspiracy theory, and I'm not saying that this is true, but just if you were an investigator, you would ask cui bono, right? Who benefits? You're trying to figure out who committed the murder. Was it Professor Plum in the library with the pipe, right? Who benefits? And this whole crash and reset, if they push the reset button and it's painful, and they confiscate people's savings, if they do not just the bailouts, but the bail-ins, as we've seen in Europe, right? And the Europeans have already said that that's possible. They can just take your savings from the banks. If they confiscate bullion again, that's happened to the United States. If it can happen by executive order of the United States of America, it can happen anywhere in the world. So nothing is sacred. Nothing is off the table. Anything is possible if these people panic. Now, and the beauty of it is that they now have this excuse. This is the non-conspiracy cui bono question I have, is that they have this wonderful excuse. It's not that they've been mismanaging the economy for decades. It's not that the central bankers had no idea what they were doing. Everything was fine until COVID came along. No, it's not our fault. And so, this creates an incentive, shall we say, to overreact and make sure everything is about COVID. Nothing is about our policies, right? Nothing's about our regulations. Nothing's about anything we did in the past. It's all about COVID-19, right? So, and what a wonderful excuse. As you said, it's good enough for martial law. So nothing is off the table. What can you do then? I don't want to overstate the case. I'm not moving to a cabin in the hills in Idaho, but I wouldn't mind having one.
Shit, I'm about to.
But there are some things you can do. One is internationalize. And certainly anybody who's a fan of Doug Casey's, this is not a new idea. And before people panic, a lot of people have a sort of knee-jerk reaction of, well, I can't do that. I have my family, or I have a family member who's in the old folks' home or something. I couldn't leave them, and we have roots here. My house is here. I get that. I'm not talking about uprooting your whole family and moving to Timbuktu. I'm just talking about diversifying your assets. At the very least, make sure that you have some, if you have enough gold to not have it all in a briefcase buried in the garden, have some in different jurisdictions. At least make it harder for the powers that be to seize what you have. And it's perfectly legal. I'm not telling anybody break any laws right now. There's nothing illegal about, buying gold on any of the reputable online platforms and storing it in multiple jurisdictions. Of course, it's better if you go down to the local coin shop and pay cash. That's perfectly legal. Again, I'm not telling anybody break any laws, but it's much better to have something with no paper trail. And then there are lots of creative solutions, but you don't want, all your eggs in one basket. That's not rocket science. I think it's common sense. And don't think, don't let your thinking be limited by this box of nationality. At the very least, given the global scale of the interventions that are possible and to some degree probable ahead, think beyond the national box as you look to have more baskets to put your eggs in.
Yeah, well said. So in a moment, I want to get into some other ways that people can prepare themselves for, a brave new world. But before then, let me ask you, what is your views on we've covered kind of macro, which we could talk for 10 hours, but if you want to summarize it in one sentence, they are going to drop nuclear bombs of money that all over the world, and they're going to have to. This is bullish for not only gold and silver, it's bullish for pretty much everything because you're going to decrease the purchasing power. So whether it's crypto, real estate, they all should do well. So we understand this, but where are you in the camp of what you think is possible for the next few years for precious metals?
Okay. Well, actually, this ties to your previous question. It occurs to me that I said nothing's off the table, and I said, really bad things could happen, or they could kick it down the road. But actually, my base case scenario looking forward, if you want to call it a prediction, you can. I can't stop you. But I don't see it that way. I see it as the most likely scenario going forward is one of stagflation, right? The wheels don't fall off. They don't get tremendously wonderful, better, oh, happy, joy, joy again. But they don't turn into this catastrophic Casey scenario either. We just have something more like the 70s.
Can you elaborate on what that is for someone like me that's 29 years old? I hear the word stagflation a lot, and I kind of understand it. It's basically that the GDP doesn't really move, and there's not really a growth in jobs, but they're printing so much money that things are kind of getting more expensive. Is that kind of what it means?
It's high inflation without growth. It is a precept of most economic theory before, or throughout the 20th century that, high inflation makes higher wages, high economic activity. There's all this incented economic activity. And that's why, by the way, you need a central bank to cool things down. So you don't have this business cycle bubble, which is erroneously blamed on the business cycle, but is actually due to the money printing. But so the idea is, there's a downturn, things slow, that's deflationary, right? So economic downturns are deflationary, economic booms are inflationary, because it all comes from consumer spending and confidence, not from the money supply. But what we saw in the 70s really shows that, no, that's not the only way to look at it. You can have, slow growth or no growth and inflation at the same time. And of course, if you ask anybody in Zimbabwe or Venezuela, they can tell you the same thing. What the 70s showed, what stagflation in the United States showed, is that even if you have the world's reserve currency, this is possible. And it's popular nowadays, the MMT folks and so on, to say, oh, well, the dollar, we're special, we're different. We can print all we want and it won't matter to us because we have that world reserve currency status. But there's no law that says it has to be that way, certainly no law of the universe. And if that confidence in the dollar is shaken enough, people will seek alternatives. And we already know political realities being what they are, China, Russia, others who have no reason to love the US dollar are moving in that direction. So stagflation is my base case scenario, actually. I can't see, given all the damage that we've talked about, and that they never fixed the problems from the last go around, that suddenly it's going to be super hunky-dory going forward. But I've grown very cautious about predicting, the end is nigh, because it keeps seeming that way and it keeps not happening. So we'll see. Stagflation is my middle ground. So key thing, obviously that's good for monetary metals. You know, gold had its famous run, you know, once it was freed by Nixon in 71 all the way up to $800 in 80. So the 70s were a great time for gold and silver. And I see something very similar now. And by the way, there was a huge retreat in the middle of the 70s bull run. People talk about this great run from $35, whatever it was, to over $800 in the decade of the 70s. But there was this gigantic correction. Gold retreated a good 50% in the middle, which it has not done this time. But if you want to see them as analogous, I think that, you know, the unpleasantness from 2011 to 2015 could be analogous to what happened in the middle of the 70s. And the bigger half of the rise was in the second part. So that would be an optimistic thing to go forward. You know that already. The piece I want to add, though, here is that stagflation could actually be good for commodities writ large, other metals too. It might seem counterintuitive, oil too, by the way, that, oh, well, if the economy's not growing, we have this stagflation, stagnation and inflation. Well, that inflation part lifts the prices of anything real. Even if the economy is not really booming, you could see copper prices go up, oil prices, all kinds of prices, coffee, anything could go up in response to the money printing, even if economic activity doesn't. This is sort of consistent with the Austrian School of Economics that Doug and I both have studied. It's very at odds with most mainstream economics. It's certainly not what Powell or Lagarde or any of these other clowns will tell you. I shouldn't do that. These other people I disagree with will tell you.
Wow.
I get impatient with name calling. It's not useful, and I shouldn't do it. I'm human, though. Sometimes I slip. Anyway, you're not going to hear this from most mainstream sources. But I think stagflation, you could actually see a tremendous increases in prices of all sorts of real assets. And that creates opportunities for investors in the stocks related to these, not just gold and silver.
So on that subject, you know, there's the crowd that, not necessarily even the metals crowd, but just the crowd of macroeconomic critics that say basically that we're headed to this, you know, everything they're doing is inflationary and we're headed to this massive inflationary scenario. And of course, the cost of living has went up, but we haven't had the types of fairy tales that a lot of people say are the result. In some ways, I think this has been bad because it's made more mainstream economic people more arrogant, because then they say, well, it's not happening. Oh, what needs to occur? You know, there's the crowd of pure Austrian economics that say it is inflation, but I guess what they're really talking about is monetary inflation. But what I'm discussing more is price inflation, is consumer inflation. What do you think needs to occur? Is it that we need money, stimulus money going directly to individuals for that to happen, so velocity picks up? Do you think that we never really get that? We get monetary inflation, but we never get significant consumer inflation. It's an interesting thing that, you know, as someone just trying to learn more, that I've just found so unusual. And so someone like yourself that has been such a huge researcher, want to know your thoughts.
Well, I have spent most of my time over the last 20 years kicking rocks and thinking about mines and metals. So I'm not actually an economist. I just play one on TV.
Got it.
I'm not actually a geologist either. I've just seen a lot of rocks and seen which ones turned into mines and which ones didn't. So I'm going to demur again a little bit. You've already outlined the variables here. We've seen monetary inflation. I don't think it's useful to be bullheaded as just refusing to talk to anybody who talks about any other kind of inflation, because you're talking apples and oranges, and it's not useful to have a conversation then. But we've seen monetary inflation fail to produce as much CPI price inflation as most Austrian types would have predicted. We do have a reduction of velocity of money. You have an economic hit. You have an enduring economic hit. I mean, just think about poor Mario Draghi running around for years saying, inflation, please, we need inflation. We'll get it. I'll do whatever it takes. We'll get inflation. And he never got his beloved inflation. So if you have a serious economic problems and, you know, that stagflation, you know, the stag part of the stagflation, if that's happening, yes, that does depress the velocity of money. Now, if we lived in a pure hard money society and economics situation where all the money was gold and silver coins, and you produce more of them, and the economy didn't grow, you'd have price inflation. The relationship between monetary inflation and price inflation would be very close, because you would just increase the money supply, chasing after the same amount of goods, prices would go up. But if you have a fractional reserve banking system, and then you have the velocity of money decrease, the amount of times each unit counts goes down while the number of units goes up, you have this appearance of everything's fine. And then on top of that, this particular time, we had the Fed paying banks to keep excess reserves on. And the Fed, I think, they say they don't believe in monetary inflation, but they also understand that Zimbabwe did happen, right? Venezuela is happening, right? So they understand that you can't go too crazy that way. And I think when they did all those crazy things they did after 2008, they understood that they needed to have some kind of break here so that the inflation wouldn't get out of hand. And that was why they incented the banks to not lend as much as they could have, and tightening the credits. And they say, we have much sounder banks this time. Well, what does that mean? It means they didn't make as many crappy loans as they did before. Well, that reduces the velocity of money again. So I'm not saying the banks should be crappy and should make crappy loans. I'm saying that this counterbalances in a fractional reserve banking system such as we have. These counterbalances weigh against the money printing. So what has to happen, to answer your question, is the counterbalances need to stop working. They need to be insufficient. What could cause that? Maybe this COVID situation does. Maybe $3.6 trillion if the Democrats get sweep happens and they get both chambers of Congress and the presidency. Maybe that will do it. That's a lot of money to unleash all at once. But who knows? And we are in uncharted waters. I think only a fool says they know for sure what will happen when you're in uncharted waters. I can tell you, here's the direction we're going. And then that direction is a lot more easy money.
Yeah, you're right. Yeah, uncharted waters. It's really weird. I definitely, I thought it was going to be a little bit more straightforward and easy when I got going. And now it's turned into much more about philosophy and much more about personal growth than it has about any particular investment, which kind of leads me to what I wanted to ask you between your years with Independent Speculator and 14 years working, very, very, very closely with Doug, who, for people that don't know Doug, he's, one of the most legendary gold and silver and commodity investors in the world. He's got like 1,000-acre ranch in Uruguay on the river, and like you go online, it's like this luxury villa. I mean, the guy is very successful. What have you really learned outside of gold goes up and silver goes up when we print too much money? Like, we understand that mining stocks, crypto, real estate, all that stuff, probably important to have. But what are the other things that you've really learned a lot? Firstly, just through your career of your own trial and errors, but what did you learn also from spending that much time with Doug? I know for myself, building my career, as we talked off air, in the personal development industry, I do have to say 99% of why I became very successful in my niches, I went to the top 1% of them, and I was like, please mentor me. I'm going to annoy you so much unless you say yes. And I built these relationships, but I never got to work with them every day like you did with someone like Doug. What have you really learned? And do you agree with this idea that, it's kind of become more of a personal development and growth journey and philosophical growth journey as well, or no?
I do. I'm a little hesitant to go too far down that road because it could shut some people down. If somebody thinks, well, I am what I am and I can't change, and you tell them that you need to be different to be a successful investor or a speculator, then that could cause them to say, oh, well, I'm done then. I can't.
Well, then let me rephrase it. What have you learned from Doug, and what, instead of making it?
I'm with you.
Okay.
I do think, so let me put it this way. So what do I learn or what do I see? And part of it is just Doug's personality, right? And his personality lends itself to successful speculation. He's not unemotional, but he's very calm as an investor. He's very calm as a poker player too, by the way. He's very good at bluffing. He's very good at not letting on what he has, and that spreads to his his personal way of being. And I've seen him take bad news, and he chuckles as often as not. He's not the sort of person um, who just turns red, starts jumping up and down, or breaks out in chills or sweats when an investment goes south on him. I've seen this myself. Um, I remember one time we were in Ecuador. We were flying to see a bunch of projects in this old army helicopter, and it was this giant two propeller thing, or propeller is not the right word, but you know what I mean, big old sky hook. And we're flying up to see these projects, and we stopped to refuel at this airport, and it's a giant helicopter, and they had the fuel, but they didn't have a nozzle that could reach high enough on this thing to refuel this helicopter. And and so suddenly panic time. Oh, what do we do? And you could see there were literally dozens of people scurrying around because they couldn't waste Mr. Doug Casey's time, right? If they don't know who the hell Doug is in some middle of nowhere airport in Ecuador, but they know that the military thinks he's important, so he's got to be really important, right? So it's really impressed me. There's all these people scurrying around to not waste Mr. Doug Casey's time. And he just, he's having a good time. He leans back, he takes the pilot over and he's telling war stories over there. They go far enough away to light up a stogie on the edge of the airfield, and they're perfectly relaxed, even though our schedule's going to hell, and who knows if we'll even be able to achieve our objectives for that trip. And that's the way he is with his investments. And I think that's very useful. It's to whatever degree that you and I have already talked about and highlighted how dangerous it is to be emotional. They get mad at the market for not, going up when you want it to, those sorts of things. That wrong-headedness is very dangerous. So having that personality is good, but I don't want that to rule out people who are a little bit more emotional. There are things you can do. You can embrace not just meditation, but practices that help you to be more dispassionate. One thing that I learned along these lines is that when I make a speculative investment, I see it as an expense. In my mind, I write it off as I spent this money. It's gone, right? So if anything bad happens, I've already written it off. And if I get my money back, or if it goes way up, I do better. It's great. It's pure windfall for me emotionally. So this is a trick that I've learned. What I'm wanting to say, to answer your picture broadly, is that the self-development side of this is important. I don't think any dog is ever so old that he can't or she can't learn new tricks. I think it is always a good idea for any person of any age to embrace that journey of self-improvement. And yes, being as dispassionate as you can about investments is one of those things. It's hard for some people, but other things are important. I mentioned skepticism earlier. I think that's very important, and that's trainable. You can learn that, you can teach that. A few mistakes will slap that sucker in home pretty good, to be skeptical. And the key point there is to be skeptical of the people you agree with. You're naturally skeptical of the people you disagree with, but you need to be skeptical of the people who are singing your song as well, telling you what you want to hear. These kinds of things, and just being disciplined, buying in tranches, or stakes as they call them, not going all in at once. There's a lot of material on the website. There's a Speculation 101 report that's free that people can download. Other materials on the website. Shameless plug?
No, please.
That people are certainly welcome to do. And they're specifically addressing your question, Jake, because I do think that successful speculation starts in between your ears.
Interesting. So let me ask you, kind of in conclusion here, outside of metals or including metals, we're in this peculiar time, of course, that we've discussed. What are the ways you personally are preparing? If you had to say, these are the 5 things that I've been doing, or these are the 5 things that I think doing. And before you go, I'll give you an example. I mean, I think that it's greatly underestimated in the investment community about the importance of having additional sources of income or having a business. I think everybody thinks whatever they buy, they'll be a millionaire next week and they'll never have to worry about anything else. businesses are so important, or just additional sources of income. Then, of course, the metals, physical, miners. I own some Bitcoin, those types of things. Food, I have food storage. So those are some of the kind of things that me personally as an individual, I've done. Just hopefully I don't need the food, but we'll see. What are some of the things either financially or outside of finance that you've done this year, or maybe even since the last lockdowns were lifted and they've kind of redone, things that you were looking at right now that, may be of interest or value to some viewers?
Sure. Well, it's not new. It's not this year, but I think it's a good example of something to think about. We talked about before internationalization. One thing I did was I moved to Puerto Rico, where I was offered a lower tax regime, which is available to many people, particularly business people. But even if you don't have a business, as an investor, the Act 22 benefits give you a zero capital gains tax rate. Now, Puerto Rico might become a state that could take that away. But it's the kind of thing that people should do. I think that it's highly useful, ethical, and a positive force for the world as well as for yourself to vote with your feet. Money should go to where it's treated best. And I think that teaches governments that don't treat money well a lesson. It's a good thing to do. There are other possibilities out there. I do think internationalization that we mentioned before is a good thing to do. If you can internationalize your life more the way Doug has, great. If not, just internationalizing your assets, your banking is useful. That's something to do. I do think that adding to your physical precious metals holdings is always a good idea. I don't trade gold and silver. I don't buy low to sell high. I accumulate them whenever I can. That's my savings. And this has literally fed my family before in case of a total financial catastrophe. The fact that I had silver actually at the time literally fed my family once when nothing else would do. So I think that's very important. In terms of this year, I think one thing to keep in mind is that the scary scenarios you and I talked about before, they may not seem sure or imminent, especially now with all the vaccine euphoria. But I don't think those things are off the table. It's entirely possible that Mr. Market could wake up one day and say, holy cow, I'm overvalued, right? And, it doesn't take some macro event to cause Wall Street to go into reverse. I think it could just happen because it happens. Selling starts snowballing, panic sets in because everybody knows at some level or another that Wall Street's overvalued. So I think prepare for the possibility of a crash. As you mentioned before, I'm not selling everything in front of a possible crash. It's a possible, not a guaranteed crash. But you want to have cash available in case there is. There could be some spectacular buying opportunities. I'm sitting on more cash in my brokerage portfolios now than I ever have. And I'm hoping, I don't want to be guilty of schadenfreude, but I'm hoping that if there is a big panic, that I'll be able to really buy some great stocks at stupid cheap prices. And if not, you know what? I'll still have the money. I can do other things with it.
Yeah, that sounds good to me. I've been thinking about that. I interviewed this guy, Mark Moss, really interesting guy the other day, and off air, I asked him the same thing. And he was saying, he's thinking about buying passports and citizenship for his whole family to St. Kitts. So actually the last 2 days I've been looking a lot about that. It's something I've been thinking about. They're doing COVID sales too. So for a family of four for $150, you make a donation to their national fund, and for seems like a pretty good deal for passports and citizenship for $150,000. I've been thinking about it a lot. I'm in the camp where I'm really concerned. And I think most people are greatly underestimating what's happening. And I think a lot of that is because when you're afraid of dying, you've activated the fear centers of your brain. You aren't thinking rationally anymore. And I think that, this is causing people to not look down the road. So the internationalization is something that, I've been thinking about a lot lately. Let me ask you a couple rapid fire questions. And for everyone still listening, make sure down below that you check out at least Lobo's free links. And if you're still listening, Leave a comment down below of any questions that you have, and I'd love to have Lobo back on. So leave the questions you have. I'll come back and I'll source the questions for the next episode. So come back, leave a question, hit the like button on either side. So let me ask you, Lobo, if we do have one of those scenario where there's another tank in the cards, do you sell out of your miners? Do you sell out of your gold? No.
No. Well, I have a strategy that I call the upside maximizer, another free report available on the website, where I refuse to let big wins slip through my fingers. Right? And so if one of those was triggered by a downfall, then I would follow up, but it would be executing my upside maximizer. It wouldn't be selling in front of the crash. I don't have any companies, and I would not have any companies in my portfolio that I don't think could survive the crash. And since you never know how it's going to go or how bad it's going to be, rather than sell and then have it turn out that I bottom ticked it and I got to get back in at higher prices, my plan is just to hold. I would be happy to average down, in a big way on anything that I own. So why take the chance of timing it wrong? Market timing, we all know how difficult that is, right? I'm happy to hold what I have. And if it goes on sale 50%, 75% cheaper, boy, I have cash ready to take my cost basis way down.
As an inexperienced investor, I was really afraid of that. And then when the market crashed in March, I was shocked at how quickly it rebounded. So, that has
you and I both, brother.
Yeah, that's made me quite less afraid. Next question: what's your favorite book?
Oh, who's my favorite child? You can't ask me that. Well, you can. You just did. Favorite book. Sorry, they're so.
Okay, I need to rephrase this question for you. What's a book that you recommend myself and others read?
Well, it may surprise you given the economics and so on back here. All of these behind me, I've read them all and I recommend them all. But I'm actually quite partial to something that Doug and I have in common too, is science fiction or speculative fiction, which we call speculator's fiction. I really love the works of Robert Heinlein. And even though that might seem like, well, why read space stories? It has nothing to do with reality. Well, Heinlein stories are really not space stories. They're people stories. And I think they're very relevant, very instructive. I think they shaped me. And it's amazing how well some of these stories written 40, 50 years ago hold up today. Similarly, James P. Hope no longer with us. He wrote a series of science fiction novels. The earlier ones are fairly libertarian. And he wrote one called Voyage from Yesteryear, which is a wonderfully optimistic look at how things, as messed up as the world is, how could things actually get better? And he presents an answer for that I think is worth thinking about. So I'll make a sales pitch for the speculator's fiction side of the bookshelf. In fact, if you do a Google search, it's not on my website. I think it's on a Casey Research website. Doug and I did a conversations with Casey on speculator's fiction, and you should be able to find that Googling it. And there's a lot of titles listed there.
Okay, I'll be sure to check that out. Two more questions. One, if you had to pick a date or a year that you anticipate liquidating a lot of your miners, is it 2025? Is it way out in 2050? If you had to pick a date, which of course we know this is pure speculation.
Yeah, I'm not going to dodge the bullet entirely. I do think this bull market that we're in has another leg that will be multi-year. So at least a couple more years that we'll see higher gold and silver prices ahead. But I actually don't plan to try to time the market. As I mentioned before, I have this upside maximizer strategy, and I expect to be stopped out. So instead of knowing when the right time is or having a goal on the timing, or even a goal as a certain amount of earnings, that's the beauty of this strategy is I don't have to say, okay, I have double my money, I'm selling, or I have 5 times my money, I'm selling, or 10, or whatever it is. The strategy lets it ride. It's basically a form of stop loss, but instead of using it to stop losses, I use it to lock in gains. So I just let it ride as long as it rides. And then if I get stopped out, I get stopped out. So I would expect to end up out of most of my stocks via upside maximizer triggers.
Interesting. I'll have to check that out. That sounds pretty cool. Last two questions. Will you ever sell your physical metals?
If I need to, like I'm not making that up. The last time I liquidated my childhood coin collection because I was caught in the middle of, it's a long story. It's available actually. It's called Defensive Hard Money. It's on my website. I was traveling. I was with my family. The job I was going to suddenly disappeared when I was halfway there in a Winnebago full of kids and stuff. And I was just broke in the middle of nowhere. And my hard assets saved my ass. It's just the way it is. So no, I accumulate. That's savings. When do you plan to liquidate your savings? You don't. It's saving. Well, it's not just disasters though. If I had a new house to buy or something, whatever you would use savings for, I could dip into my hard savings for those reasons.
Okay. Yeah, that's really interesting. Okay. Well then 2 more questions because you said kids a couple times. What's the digits of kids you got? I just had my first one. She is 4 months right now.
I have 5.
Whoa, no way. Are they all in Puerto Rico?
No, only one is here. I have 5. Yeah, the oldest is 33.
Oh, wow.
The youngest is 20. I'm older than I look. I'm actually looking forward to being a grandfather, but that doesn't seem to be in the cards anytime soon. I'm waiting. I've got lots of batteries here to give noisy toys, and I shake them up until they get barfy and hand them back to the parents. All those tricks. I can't wait, but oh well.
That's funny. Okay, last question. What are you excited about right now in life or grateful for right now in life?
Boy, many things, but the immediate answer has to be my beautiful CFO, COO, accountant, partner in crime, my wife, my love of my life. I'm fortunate enough to have learned from some past mistakes and been given a chance to do right by an amazing woman. And suddenly all those silly Hollywood movies and love songs, they all make sense. And by the way, we've been together almost 10 years, so I'm not just suddenly love struck. But it is stunning to me that something so deep and rewarding can last this long and leave me believing that it can last a lifetime. I thought that was a fairy tale. I didn't believe that was real. And now it's funny, I'm an older man and I'm more romantic and optimistic than I was as a young cynic.
That's cool, man. Good for you. I have to say I fall into that same camp. My parents were divorced growing up, and so I really didn't even believe in the idea that love existed. And so I fall into that same camp. So for everyone watching, if you haven't yet, make sure you hit the like button. I don't like to make these interviews too long because there is a drop at a certain point. So instead, we'd love to have Lobo back on. I'll go through your free reports and find some of my best and most valuable stuff, and maybe we could talk about in more detail. Check out the links down below. One of the best in the business, and obviously someone that, as you heard, that could really help you navigate these markets, not only just in metals, but in all commodities. And so right there down below, you could check the link out. And thanks so much for coming on.
Thank you, Jake. My closing point would just be, I'm not perfect. You put me on the spot for some guru questions. I do look forward. I do not promise to always be right, but I do promise to always be straight with you.
Yeah, that's what I said to you before. That's why I like you. You're very straight. So thanks so much. I really appreciate it. It was great to talk to you. Great to meet you. And I'm looking forward to having you on again.